Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We also want to get back to the data as well, and that's JOLTS number coming in a little lighter than estimated. Also, just looking at the 2-year yield, over the last 5 days, it's had a 23 basis point move to the downside as there's been a lot of money coming into the bond market. Is it short covering? Is it true buying? Is it really looking for a cut from the Fed? You know the person to ask for this, right? There's only one guy. It's Ira Jersey, Bloomberg Intelligence, Chief U.S. Interest Rate Strategist, standing by. First, Ira, let me know what you think about the JOLTS number. So coming in a little lighter, but nothing terrible. What's your reaction to it?
Yeah, I don't think that you still have 8 million job openings, right? So it's not like it's completely fallen off a cliff. But we continue to see this modest pullback in the number of job openings, and I was just trying to go through some of the data, looking at things like quits rates and the like, because I think that's the more interesting, nuanced data that comes with the JOLTS report. We also have to remember it's a little bit dated compared to some of the more high frequency data that we get that's going to start being from May that we've already started to get with the ISM data yesterday. So this JOLTS data I think is interesting for trends, looking at things like job leavers and if job leavers are getting more higher wages when they leave and the like. So, I need to dig into the data a little bit more. The durables numbers were also kind of important because the durable goods orders had slipped in the second half of last year, and now they seem to be at a reasonably steady state now. So, that's not it's not showing that the economy is really falling off a cliff by any stretch, but maybe things are slowing just a little.
So, Ira, again, as Alix was just pointing out, we've had a pullback, a noticeable pullback in rates here. I was looking at the 10-year, 4.34% here, although the mortgage rate's still sitting stubbornly just above 7%. Is this a technical move in the marketplace, Ira, or is this some fundamentals, some folks kind of really putting some positions on one way or the other?
Yeah, people are definitely short covering a little bit, as well as maybe adding a little bit of duration risk here. You mentioned, Paul, the 20-ish basis point rally in the 2-year note, and I think that's endemic of the idea that we had basically priced out almost every cut this year. We're now pricing in maybe the chance of a cut again, especially after yesterday's ISM manufacturing numbers, and the new orders numbers really slipped hard, and that has historically been a pretty decent indicator of where the economy's headed. So the market is getting in front of what it perceives maybe as a deeper slowdown than they had been expecting prior to seeing some of that data. You look at the 10-year yield, and we're at the bottom end of what's been a bit of a range, talking about, broadly speaking, 4.3% to maybe 4.5, 4.6%. And now that we're kind of at the lower end of that range, I suspect that you'll start to see the momentum slip. But 4.3% is a pretty important technical level. We break below that, and we could wind up testing a low 4% kind of area once we do. So, and it'll be interesting to see how many people have kind of stop losses there in terms of once we break below that, the shorts might get really nervous and wind up covering very dramatically, and you can often see pretty big moves once that starts to pick up steam.
Well, yeah, that's what I was going to ask, because headed into Jobs Friday, is positioning clean? Is there one side or another in terms of too many longs, too many shorts?
I don't think that there's too many at the moment. Positioning data in treasuries is a little bit hard to come by, because it's a matter of who actually owns it, and are those hands sticky or not. And what you do see, you look at things like the JP Morgan Treasury Sentiment survey that they do of some of their customers, and that shows that investors are a little bit long, but not very long. You look at some futures positioning, and certainly people have been lightening up their shorts using Treasury futures. So all of those things really, I think, lead me to believe that we're probably not over our skis one way or the other, unlike when we were at 4.7% on the 10-year yield, when a lot of people were really short and it seemed like, if you got any pullback, it was going to wind up being pretty dramatic. But nonetheless, I think people are still a little bit skittish. People are still uncertain. And the fact that people, aren't particularly in one risk or the other, then putting on that risk could wind up moving the market pretty dramatically, because liquidity just isn't what it used to be in the Treasury market. You could still see, 10, 15 basis point moves on things that you wouldn't expect there to be as dramatic of a move. Yesterday's the ISM report, as a case in point, a 9 basis point move in 10-year treasuries on yes, a bad report, but it wasn't like insanely bad by any stretch of the imagination.
All right, Ira. Next Wednesday, Fed Day. What are the smart people like you? What are you going to be listening for?
Well, certainly, we get Friday's payrolls report first, Paul. But yeah, next week, it's really going to be what is the propensity, and has anything changed from the last meeting in terms of their being on hold consensus. So we suspect that their base case is going to be, we're holding rates where they are until it's clear that either the economy is falling out of bed or inflation is healthily going toward their target of 2%. And that latter one, the inflation, it doesn't seem likely that you're going to get a significant downtick in inflation over the next couple of months. So, and quite frankly, if they don't cut in July, I doubt that the Fed will make its first cut in September. For a couple of reasons. The election certainly is part of that in the back of their minds. They won't never admit that, but I suspect that it is. But if the data is not that bad from their standpoint, look, waiting 6 weeks, cutting in November, that's probably what we're going to be listening for, is what's their triggers, right? And you've heard some speakers talk a little bit differently than what Jay Powell said in early May, like talking about the potential for hikes if inflation were to reaccelerate. So it'll be interesting to hear Jay Powell in the press conference if he actually says something about that, because he refused to do that in May. And if he comes out and says, yeah, we're a little bit more symmetric, certainly if inflation goes up, we'll have to hike more. He was given every opportunity in May to say that, and he just didn't.
All right, last question here for us, Ira. You mentioned what are the central bank triggers, and I'm wondering the spotlight it puts on the ECB on Thursday. It feels like the June cut has been widely telegraphed, and I'm wondering how you see those differentials really playing out.
Yeah, so if the ECB doesn't cut as is anticipated, then I think you can wind up seeing some pretty dramatic market action. You probably see front end yields go up a little bit globally, not only in Europe but also here in the U.S. The global rates markets have been reasonably correlated, although the ECB, the Europe bond market and German yields have diverged a little bit from the U.S. It really comes down to, I think, that the big moves that you'll probably see if something like that happens will be in FX, and I do think that the euro could move pretty dramatically and maybe strengthen quite a lot if the ECB doesn't cut interest rates.
All right, Ira, thank you so much. We appreciate that. Ira Jersey, interest rate strategist for Bloomberg Intelligence.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The other big story we're keeping our eye on is India's election. The stock market has completely plummeted here, racing about $386 billion in market value. The tally signaled that Prime Minister Narendra Modi's ruling party was struggling to win a majority of seats, and that was very much a surprise. Narendra Modi is speaking right now as well. We've been waiting for this address to the nation, and he's finally speaking. Joining us, Dan Strumpf, Bloomberg Senior Reporter in New Delhi. What do we know from what Narendra Modi is saying right now?
Well, I mean, it's looking like Modi and his BJP party, which has ruled India with quite a substantial majority for the last 10 years, is going to be losing its majority in the parliament and is going to have to form a government with its coalition partners. So it's really a major electoral setback for Modi, an electoral setback for the BJP, and I mean more than anything, just quite a surprise to everybody here today. I mean, the ruling party was going into this election very optimistic, very confident of expanding its majority in Parliament, of getting a 2/3 majority with its alliance partners, and it's looking like a total reversal on all those fronts.
So, Dan, what are the people saying here? What are the voters saying here? What don't they like? What are they pushing back on in terms of the Modi administration?
Well, one message that's emerging is that there's a real sort of simmering discontent with the economy that propelled a lot of voters at the polls during this election. I mean, you know, we know that India's really a big economic success story. I mean, 8% economic growth in the most recent fiscal year. You know, a growing presence on the world stage and a rising manufacturer. But below the surface, there's a lot of issues. There's issues with high levels of joblessness, rising inflation, widening inequality. I mean, these are all issues that have really, you know, grown in salience over the last 10 years, and that Modi and the BJP have really struggled to address. And these are issues that the opposition really seized upon in this campaign.
All right, Dan, thanks a lot. We really appreciate looking forward to hearing more what Narendra Modi will say in this national address. Dan Strumpf, Bloomberg Senior Reporter in New Delhi.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, Alix, here's the stuff that just gets me every time I come here. BNY Mellon is the world's largest custodian, and Pershing is now the second largest business within BNY Mellon. And I've done business with Pershing for 30 years, but every 5 years they have a different owner, it seems like. But it seems like they found a home here, BNY. So we are in Nashville, Tennessee, the Grand Gaylord Opryland Resort in Nashville for the BNY Mellon Insite Conference. Alix Steele and Paul Sweeney. We're joined right now. We're very appreciative to get some time with Jim Crowley, Global Head of BNY Mellon's Pershing Business. He joins us here on site. Jim, thanks so much for having us this year. I know you got 2,000 financial advisors around here. They've all got their own agendas, but what's the theme you're trying to get across to the folks here?
So 2,000 advisors, correct, and thought leadership people. So the theme that we're trying to get across is how do you take your business to the next level? Because we believe that scale, productivity, and growth are the lifeblood of our industry. And at BNY Mellon, who is, by the way, celebrating its 240th year in business, we believe that there's so much value embedded in the BNY Mellon franchise that we can unlock and deliver to these financial advisors to help power their growth in the future.
And what does that growth look like in the future? Like, what's new today that wouldn't have been here a year ago?
Well, I think what's new today is that people are more and more coming to the realization how complex this business is and becoming even more complex in the environment, whether it's macro things related to technology, regulation, or just the economy, and how much energy and how much investment dollars they have to invest in operating the business. So how can they outsource things to be more efficient, more productive, drive more scale, and sort of eliminate those binding constraints to their growth?
You know, one of the great stories, I think, in personal wealth management is this whole transition or bequeathment, if you will, of the wealth of the baby boomer generation to the next generation. So if I'm a financial advisor, I'm not just a stock and bond person. I got to think about estates and wills and taxation and all that kind of stuff. How do you guys help them with that?
Yeah, planning is certainly becoming more and more part of the formula, right? So investment management used to sort of be the core competency of a financial advisor, but now it's a different story, right? You have to have a large breadth of services that you can offer to every one of your clients because their financial lives are becoming more and more complex. And so we put out in the marketplace a platform to offer all those things, whether it's planning, whether it's tax transition work, whether it's estate planning, and providing them with investment management tools and all the other products that they need in order to be successful with advisors.
You were talking earlier about Grayscale having a booth right behind you.
Yeah.
That's different, is it not?
It is. It is different. And in fact, if you take a 3-year sort of perspective on the business, we have this thought that almost every portfolio will have some tokenized asset in their portfolio in 3 years.
Wow. How much of the portfolio?
Well, to be determined, right? Whether it's that 5% or that 10%.
That's a big difference if you're a Bitcoin holder.
It's a big difference at 66 or wherever we're at. Yeah.
So talk to us about security. If I think about a system, a financial system, I mean, at Bloomberg, we take data security and the security of our system extraordinarily seriously. And I know the folks in the financial services industry have to do as well. So if I'm a wealth manager out there trying to serve my clients, how do I feel secure about maybe your platform or just platforms in general? Yeah,
so what comes along with being a 240-year-old institution is this notion of resiliency. And being a globally systematic and important bank, we have a lot of help with making certain that all of our systems and all of our data are well protected and backed up. And so we take great pride in everything we do around cyber resiliency. And we also take great pride, by the way, in making data available to clients. Because these clients, these financial advisors, need those insights. And so we're working hard on trying to create the tools that they need to not only stay resilient in their operating environment, but also to create value with the data that we have.
So how many wealth advisors, financial advisors are here? 2,000?
Well, give or take, there are 2,000 attendees. There are roughly 1,000, roughly 50% are advisors, and then roughly the next half is going to be thought leaders, exhibitors that are here. And then a group of us who are in client coverage business. Do we have too many wealth managers? Too many financial advisors? Well, that's a very interesting question, because I don't think we have enough wealth managers in the U.S. The demand for, I think, wealth advice is only going higher given the complexity of the operating environment. And let's be just sort of say it the way it is, wealth managers are aging out of the industry. Yep. So we need to bring the next generation of wealth managers into the market. Well, Sweeney offspring number 3 is going into that business right now. That's cool. Yeah, finally 1 out of 4 is following me on Wall Street. I guess that's not too bad of an average. How about consolidation in this business? There's a lot of mom and pop advisors out there, and I would think, as you mentioned, with the complexity of the business, just managing the business, getting so much more. Is there going to see more consolidation, do you think? I think the consolidation is going to continue, Paul, and we sort of see this separation happen. You have a large number of firms now who are becoming even larger as a result of not only organic growth, but inorganic growth, and that's going to continue to sort of happen, we believe. And then at the other end of the spectrum, there are several niche firms who are going to continue to operate as they do, who operate at scale in their market and stay at that size. But in order to get to that scale that I was just talking about a moment ago as a result of M&A, you really do need more resiliency, more structure around what it is you're trying to do. So to the point, if you put these points together, Lisa Mateo was just talking about GameStop, and Paul was horrified and he rolled his eyes. But the idea that a lot of young people, and not even young people, but people think they can do this themselves, that they don't need help, and that they have the tools online to manage their own money. What do you tell them with that? I think that the tools are getting much, much better for people to manage their own money. And the product availability and the education material is becoming much more prevalent in the marketplace. However, money is very emotional. And when you get to a certain asset level or wealth level or your life complexity changes, having another person sitting there alongside of you to coach you through that and even out those emotional spikes is super important. So I think the wealth industry is really well positioned over the next number of years as wealth expands, and it is the fastest growing marketplace, that there's going to be a need for wealth advisors, more of them, and their role and their value in the relationship is only going to get greater as more complexity enters. So since I've been on Wall Street more than 30 years, the story has been brokers leaving, financial advisors leaving the wirehouses and going out on their own. Yeah. That hasn't changed, has it? I don't think that has changed. I mean, there is look, there's a shift in the industry from when we started in the business. 100% of the things that we did were commission based. Today, the majority of the business that we have on our platform is advisory based. And so I think this idea of financial advisors, more and more of them needed for the industry, and the idea that some of them want to run their own business will continue to sort of be a trend. But I think more of those firms now, Paul, are looking to land someplace as opposed to sort of building something fresh and from the start, because it's pretty hard.
Jim, really wonderful to chat with you. Thank you so much. I learned a ton. Jim Crowley, Global Head of BNY at MELLON'S, Pershing, and good luck on your keynote. You haven't given it yet, right?
No, it's afternoon, 1:45.
Oh, 1:45.
Okay. Yeah.
All right, deep tease there. Enjoy that as well. We have to wonder, though, as people become more confident in their way of trading or operating, like, how long are they able to put off a financial advisor? Does it come with a kid, your first house? Like, what is that trigger point to move the young
exactly
kids?
I mean, I think as Jim was mentioning, the complexity of managing money, whether it be wealth management, taxes, wills and estates, and all those types of things, all the legal side of it as well, it gets pretty complex pretty quickly. And if you start talking about real dollars and cents, I bet you that is a big issue.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is Bloomberg Intelligence Radio. We cover all the top news in business and finance through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. And every once in a while, they let us take the show on the road. We get to broaden our outlook, particularly in the areas that really concern you as an investor. And we are here from the unbelievably huge Gaylord Opryland Resort in Nashville, Tennessee, for BNY Mellon's 26th annual Insite conference, speaking about over 2,000 financial intermediaries from top asset management firms will be here. And joining us now to discuss all of it is Emily Schlosser. She's Chief Operating Officer at BNY Mellon's Pershing, and she joins us here on set. Wonderful to see you.
Thanks, Alex. Good to be here.
And the highlight is that you're talking to Keith Urban on stage.
Nice.
Is that's happening today?
That's happening on Thursday morning, yes, and I agree. It will be the highlight.
So are you interviewing him, or is he interviewing you?
Oh, for sure I'm interviewing him.
Okay, just checking.
Yes, he is the star of the show.
And what are you guys going to talk about?
There are a handful of things that we're going to cover. He has really interesting stories about his creative process, about overcoming diversity. He has a real emphasis on putting in the hard work, which is something that we're sort of all about here at Bank of New York Mellon. So there are a lot of things that are analogous, and he will be giving us a little bit of a show, too. So that'll be great.
Hey, Emily, we're looking around here, and there's lots of financial advisors, registered investment advisors, lots of asset management providers. What are some of the, I guess, operationally, what are the challenges that these RIAs deal with every day when they're trying to establish relationships with clients, bring in new assets, manage the assets that they have? What are some of the challenges they face?
Yeah, I think ultimately it comes down to productivity and scale. Really, their biggest challenge is to free up advisors so that the advisors can spend more time with their clients. At Pershing, we've made it our mission to help advisors help more people, and we're doing that by creating the most connected and productive platform to power the future of wealth management. And that notion of automation and allowing RIAs and broker-dealers to operate at scale so that their advisors are spending less time doing administrative tasks in systems and more time out with their clients, that's really what it's all about.
How hard it is to do all that? To create that environment where people can just talk to their clients more.
Yeah, it's very challenging, and there's a reason why it's taken us kind of this long in the maturity of our industry to get to a point where we can really do that. We've seen studies that say advisors spend as much as 60 or 70% of their time doing administrative tasks. And so part of what we've done in rolling out a new advisory platform, which we launched at this conference last year, so it's the 1-year birthday of Wove, which is our advisory platform, is built from from the ground up an interconnected suite of tools for advisors to use to manage their day-to-day. So it's not a patchwork of stuff that we've bought and tried to sort of stitch together. This is really from the ground up, from its inception. It was designed to be totally interconnected so that data flows seamlessly across the applications, everything works together, and advisors no longer have to kind of swivel between different applications, which just consumes an enormous amount of their time.
From a competitive perspective from BNY Mellon, how do you compete? Is it spending more on technology? How do you guys compete against your competitors out there?
Yeah, well, none of our competitors have the force like we have with
Is that the Fidelities of the world and those types of people?
Fidelity, Schwab,
okay.
are some of the big players in our space. And really what we have with the entire ecosystem of Bank of New York Mellon is completely unique because we do have a massive technology organization that we can bring to bear with incredible amounts of investment spent on things like resiliency, cybersecurity, as well as the latest and greatest in innovative tech, generative AI. So we have this whole kind of force behind us from a technology perspective. And then we also have a world-class investment management arm. We have world-class treasury services and payments capabilities. So it really creates this whole wrapper around our core custody offering that amplifies what we can bring to the market in a way that nobody else can.
I judge myself for asking this question, but I'm going to ask it anyway. As Chief Operating Officer, how do you use AI and generative AI?
Oh, interesting. So we are using AI in a lot of different ways. It's been available on our platform for some time with natural language search and greater ability to navigate. All of our navigation prompts are customized based on what consumers use most, so it is learning along with the user to make the experience more user-friendly and personalized. And we are leveraging tools that help us automate things like processing documents and running more of our operations straight through. We are playing quite heavily with generative AI, particularly internally for now, where we're able to kind of access information much more quickly and have the help of tools as we're kind of creating intel for our clients.
How about cybersecurity, just data security in general? I'm guessing that's a constant source of investment for you guys. How do you think about that?
Yeah, constant. It is one of the most impactful things that we can spend time on because the threats just keep amplifying kind of day over day. We see increasing threats from cyber challenges. And it's one of the reasons why having the Bank of New York Mellon behind Pershing's brand is so powerful. I mean, we are a 240-year-old bank. We pride ourselves on being incredibly resilient, and we really are at the cutting edge of what's happening in the cybersecurity world.
What are you most excited about for the rest of this year?
I'm really excited about what some of the new technologies can bring in terms of productivity and scale. I mean, at its core, generative AI is a productivity tool. Productivity is what we're all about, and I think it's one of the most kind of the biggest step changes in innovation that we've seen in recent history. So I'm really excited to see what we can do with it.
If you lose a group of advisors from your platform, why did they leave?
Interesting. It doesn't happen often. Sometimes it's because they have chosen to consolidate, go through M&A with a company that uses a different provider. So that's often what would drive the change. Sometimes it's a change in model or they're looking for an exit strategy, so they sell their firm. Those would be the biggest drivers.
What are the biggest questions that you're getting right now from your advisors?
Yeah, the biggest questions I think do revolve around how do we just make ourselves more productive, more efficient. But then we also do have a lot of questions around how do we get more into the alternative space? How do we become more effective in providing investment offerings to our clients? So historically, many advisors have also been portfolio managers. I think more and more we're seeing clients looking towards that centralized office of investment that can be leveraged as more of a central utility so that each advisor is not trying to be a portfolio manager in their own right, but are spending more time on things like financial planning and building relationships with clients.
Emily, we really appreciate it. Thank you so much, Emily Schlosser, Chief Operating Officer at BNY Mellon's Pershing. Good luck with Keith Urban.
Thank you.
This should be super exciting.
Thank you. I'm
love
very
this.
excited.
I love this for you.
I love
great
it
to
for
get
me
that.
too. Thank you.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alix Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news and analysts from our Bloomberg Intelligence arm. They cover 2,000 companies in 130 industries around the world. And for now, we are lucky because we're broadcasting live from Nashville, Tennessee at the Gaylord Opryland Resort for BNY Mellon's 26th annual Insite conference with over 2,000 financial intermediaries from top asset management firms. And joining us right here on set, Ben Harrison, Head of Wealth Solutions at BNY Mellon's Pershing. It's good to have you here, Ben. Thanks for stopping by.
Good morning. Thanks for having me.
So your panel, which is Thursday, is the future of financial advice, perspectives on the evolution of wealth management. That seems nice and broad for you. What are you going to say? What's on the docket? What's on your mind?
Yeah, so it's going to be a great panel. We've got a number of industry experts that are going to join me, and what we're going to talk about is there's really been a bull market for financial advice. If you look back over the last 10 years, the wealth business has grown from 23 trillion to 52 trillion. It's really fueling the need for investors to have great advice from advisors. The conundrum is we're not creating more advisors. There's about 300,000 advisors. So it's really teeing up this productivity imperative that advisors need to deliver more for their clients and do so with more scale.
So we're speaking with Ben Harrison, Head of Wealth Solutions at BNY Mellon's Pershing here in Nashville. Ben, can you explain the reason why I would leave a wirehouse like Merrill Lynch and become a registered investment advisor at an independent place?
Sure. So a lot of that demand is being driven by investors. Investors really are seeking fiduciary advice, comprehensive, holistic advice, an advisor that sits on the same side of the table as them and isn't sold products, but really it purchases products to fulfill a goal-based financial plan. So advisors are seeking an opportunity to be aligned with their clients, and that gives them the opportunity to go out, establish a registered investment advisor, and have full control in order to provide that experience.
There's no more Merrill Lynch stockbrokers. Aren't they advisors too? Haven't they evolved that business?
Yeah, we've definitely seen a convergence in the business models towards this goal-oriented, holistic advice. So there's absolutely, we're seeing that from both sides of the market right now, and that's creating a lot of competition in the space.
Okay, so what is your advice for wealth managers, say in the back half of this year?
Yeah, so we've been experiencing a market that continues to have tailwinds. But clients have a ton of complexity in their lives. So it's all about focusing on the client needs and having a very clear optimal client profile and delivering the solutions that an investor needs in order to solve anything that they may need to deal with in their personal lives.
Every town USA has a Smith Barney office, a Morgan Stanley office, I should say, a Merrill Lynch office, plus 3 or 4 registered advisors offices. Does there need to be consolidation among the RIAs, or is it better to be able to, hey, we're small, we're local, we know our clients? How's that trend evolving?
Yeah, we are seeing a tremendous amount of consolidation in the space. The mergers and acquisitions that we see in terms of aggregators and roll-ups coming into the space and taking out some of the smaller firms and rolling them into wealth practices is absolutely happening. It's not slowing down. That's going to continue to accelerate. But at the same time, there is room for advisors to have unique value propositions for clients in communities. And what we've seen is that clients have a propensity to work with people. Despite the fact there are so many digital solutions and ways to leverage AI and other unique capabilities in the marketplace, investors want to work with a person, and if you can deliver a great value proposition, then you've got a business to be had.
So what is the right RIA model, the registered investment advisor model? Like, what is the right model for someone?
I think it all depends on what the client need is. It depends on where they are in their life cycle. Are they at the stage of their life where they are accumulating assets? Are they at the stage of life where they're planning for retirement or drawing down? Are they a mass affluent investor? Are they a high net worth investor? Are they an ultra high net worth investor? And there are flavors of registered investment advisors as well as broker dealers and as you mentioned, other financial professionals that solve for a variety of those different needs.
We've been coming to this event for several years now, and a common theme has been you want your advisors to be able to spend more time with their clients, less time on the administrative work. Is that just a function of technology, integrating technology more into the everyday work of an advisor?
Yeah, that's we talked a little bit about that in terms of this productivity imperative. We know that there's a significant demand for advice. There is not as many advisors to fulfill that demand, so it's really incumbent that we have the right tools and technology so that advisors can spend more of their time with clients and less of their time working on the back office or the tools in which to do so. That's a big focus on our strategy at Pershing in our mission to help advisors help more people. And a lot of the tools and technology that we are showcasing at this event does just that. And we're excited about rolling out some of the new things that we have with our Wove platform.
Here's something just broader. Everyone's just living longer. And there's a question as to sort of like, when should you retire? How much money do you really need for retirement? And nobody really knows the answer to any of this. How do you talk to clients about that? Because I have to think that is a huge worry. And when you normally retire at like 65, but then you're dying at 70, that's one thing. But that's not happening anymore.
Yeah, you're absolutely right. And this is something that advisors really need to work with, and investors need to really consider the lifespan that they potentially have in front of them, including health benefits and health care. That we see, this idea of advisors delivering more, it's getting well beyond just investments. It used to be an investment game. Now it is a planning game of all the complexities of one's lives, whether it be health care, whether it be long-term care, whether it be benefits that advisors need to think about. So we're seeing lifetime income becoming a very important tool that's utilized in a comprehensive portfolio. Insurance, tax, all of these things.
I have permanent life insurance. Like, I got that when I was like 36 because I'm so terrified of like what happens when there is no Social Security and I'm like 80 and I need assisted living.
Well, absolutely. And for the emerging population coming up, it's going to be completely different for us than it was for generations ahead of us.
Well, what are some other big themes that you guys talk about a lot? Like, what's the next year? What are we going to be talking about next year at this conference?
So there's a lot on the horizon that we think about each and every day in our business. We see artificial intelligence, playing a big role in the marketplace right now. We see alternative investments continuing to emerge and rise in terms of getting into the retail investing population. You hit on a couple of the other things in terms of the longevity of portfolios and that people are living longer. So there's a tremendous amount of things that people are thinking about in terms of navigating how you contend with that with your personal finances.
What do you think about alternative investing in terms of the conversation with wealth managers right now?
Yeah, we've definitely seen an uptick in terms of the appetite for alts in retail investors' portfolios. We know that they've been utilized in institutional portfolios for years and years, and now they are taking a strong place in the individual investor portfolio, and we're moving away from a 60-40 type of allocation to one that includes alternative investments as a important part of the individual investor portfolio.
Ben, thanks so much. We really appreciate you stopping by. I know it's quite busy for you, but thank you. Ben Harrison, Head of Wealth Solutions at BNY Mellon's Pershing, joining us right here in Nashville, Tennessee.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alix Steele and Paul Sweeney. We are live in Nashville, Tennessee. We are at the Gaylord Opryland Resort in Nashville here for the BNY Mellon Insite Conference. They've got about 2,000 financial advisors here, and they're talking about the future of the wealth management business. Our next guest is Sareena Dalla Brookshire. She is the Chief Product Officer for BNY Mellon's Pershing, joining us live here. What kind of products are you hearing from your wealth advisors about digital?
Absolutely. So on the digital side,
crypto, I'm thinking generally broadly defined. You know, what kind of are they asking you about crypto?
I think that there is, maybe reduced interest in that at the moment. But I think that, overall, we exist to serve a wide variety of product sets on our shelves, and so as we continue to monitor the regulatory landscape around that, that's something that we can explore in the future. But as I would say, from a broader digital standpoint, really, what we hear the most of is around productivity and scale, and ultimately, really, how do we help our advisors do their best work by ultimately giving them the time back through connected tech, connected data, and connected experiences.
And we're speaking with Sareena Dalla Brookshire, Chief Product Officer at BNY Mellon's Pershing. We're talking about product innovation. So, what's the product that you've launched, say, in the last year that has really helped those issues that you're trying to address, just making wealth advisors more efficient and more able to spend time with their clients?
Yeah, so some of them you'll hear about later this afternoon, but what I can share where I feel like there's a lot of really good energy around this is within our NetX 360 platform. We built a lot around personalization, and so how that takes shape, investing in AI and emerging capabilities, is ultimately personalized menus, personalized navigation. We actually recently implemented a feature around asking a question to really reduce the time spent on reporting and compliance-related analytics. And ultimately, something that took upwards to 20 to 30 minutes now takes a mere matter of seconds. So that's one innovation that we're really excited about and want to continue to press on as we think about different ways for our advisors and their teams to do more with less.
Are they always open to technology, or are some folks, just like in life, less open to them? Maybe older or something like that?
I mean, product adoption certainly has a spectrum of early to late adopters. Yep. But ultimately, right, as you think about ways that actually benefit you, we've seen a lot of adoption, right? Because ultimately, as you've probably heard in some of these other segments, right, there's a finite amount of advisors today, a proliferation of high quality advice, and and advisors need to adapt their practices and how they work to meet those demands.
How does it usually work? Like, do your clients come to you and say, hey, I really need help with this? Or is it you being like, you really need help with that, you just don't know it yet?
Great question. And actually, part of one of the things that we instituted in this new product organization was really around how we work. And so part of our philosophy is you need to be client obsessed, data driven, and we need to have direct sort of co-creation with our client base. And so that's something that we've been really kind of pushing towards. And so ultimately, it's a combination of us looking at market data, monitoring the trends, working hand in hand with our advisors to understand kind of the pain points, observing them directly, looking at say-do gaps. What do you say? What do we hear? What do we observe? And figuring out ways to kind of build solutions that really are steeped in that problem space.
Wait, what's a say-do gap? I've never heard this before. Do you know this?
It's like when you say you want to lose weight, but then your pantry is full of potato chips, right? So it's sort of that say-do gap around what you say and what you actually do, and sort of the gap between.
Oh, like I want more sleep, but then I don't go to bed early.
Correct.
Okay. Now I'm with you. Now I got you. Okay.
So, Sareena, talk to us about what are some of the trends you're seeing there in products. What are your clients asking you for more of, better of, that kind of thing?
Yeah, so on the digital side, as I mentioned, right, they want, streamlined workflows. They want more efficient ways to onboard clients. They want ways to sort of scale their practice. They want new tools to connect all of the various systems and data so that they don't have a swivel chair, so they don't have to sort of context switch in the moment. And we're finding that on average that saves almost about 2+ hours a day.
Oh my gosh.
And then from an investment standpoint, right, there's a lot around, alternatives being sort of a growth area, right, especially with the expansion of the private markets and just overall impact on investment outcomes. And then clearly, right, growth in ETFs, so looking for different flavors to fill the portfolio. Maybe one last thing I'll add is just, we see more and more investors driving the conversation. So 90% of investors want an advisor that, quote unquote, gets me, right? And so what that means is, and 70% actually want an advisor that shares their personal values. And so what that means as an advisor, you got to know your clients really, really well, and you got to be able to spend the time with them. And so ultimately, what we're trying to do here is help advisors help more people. And so we believe that the combination of these sort of investment solutions and connected digital solutions gets advisors closer to that.
What are some of the problems that you foresee that product will need to solve for that just don't have answers yet?
That doesn't have answers yet. I mean, I think that, looking at broader sort of access, I think we're starting to see a lot of democratization of products and sort of bringing institutional products more down market. I think that you'll continue to see more of that as a trend, just so more and more people have access to high quality advice and high quality products. And then I think, as you look at managed accounts and advice more generally, like how do you ensure the most efficient way to deliver that? I think those are some areas. And then maybe one more is just we're seeing more and more clients really want to have like their full balance sheet together. They want the ease of seeing, if you are an advised client, to have your wealth solutions and your banking together. Makes sense. And so that's where you're going to start to see some of that also come together over time.
Sareena, thank you so much for joining us. Really appreciate it. Sareena Dalla Brookshire, Chief Product Officer, BNY Mellon's Pershing, joining us live here in this vast, what do we call in this room here? Like just a
oh my gosh, I don't know.
Auditorium
It is
kind of
enormous.
Thing? Yeah,
it is huge.
It's huge, and this is where it's all happening. So here we're at Nashville. We're at the Gaylord Grand Ole Opry. I did some business with the Gaylord family back in the day when they owned TNN, the cable network, and they owned Country Music Television. So in addition to all these resorts they have here. So some good times down here. But this place is massive. It's got everything you want down here. It's a great place to have a conference, because plus you also have access to Nashville and all the stuff that's there.
I feel like resort is like an understatement, though. Like, I literally have an app that I had to use to get directions on where to get from my hotel room to here, like Google Maps.
Yep.
Like, that's not resort. That's, I don't know.
That's mega.
It's huge.
It's Vegas. Yeah. It's kind of like Vegas.
It is like
size.
Vegas.
Vegas
absolutely.
Size.
Well, you certainly hit your step count.
Yes, exactly.
I'm hoping.
Exactly.
I'll check on that for you.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.